Nvidia, the most valuable company in the world right now, just dropped something that honestly sounds insane. They're targeting $1 trillion in revenue by 2027. Not valuation, not market cap, revenue. Let that sink in. Now, if you've been following this channel, you know I don't get excited easily. I focus on fundamentals, cash flow, and long-term compounding. But this is different. Because what Nvidia is doing right now is something we've never really seen before. The largest company is also the most profitable company. Let's start with the numbers. From their latest full-year results, Nvidia generated about $130.5 billion in revenue and roughly $72.9 billion in net income. That's over 55% net margins. Not gross margin, net margin. That puts them above companies like Visa in profitability, which used to dominate this category. Now think about that. A hardware company with margins higher than payment networks. That should not be normal. And yet, here we are. Because Nvidia isn't just selling chips anymore. They're selling the infrastructure of AI. Now let's talk about this $1 trillion target. To be clear, management is not saying $1 trillion in a single year. They're saying cumulative revenue visibility through 2027 could reach $1 trillion. Still massive, because just a few years ago, Nvidia was doing $27 billion in revenue in 2022, and now they're already above $130 billion. That's a 5x in just a few years. So the real question is, what kind of growth is the market pricing in today? And more importantly, is it still worth buying? Let's be honest, Nvidia today is probably one of the highest quality businesses ever created. 3 reasons. First, demand is not cyclical anymore. This is not gaming GPUs. This is AI infrastructure. Every major tech company, Microsoft, Amazon, Meta, they're all racing to build AI capacity, and Nvidia is the one selling the picks and shovels. Second, pricing power is insane. Their gross margins are around 70% plus. That means customers are not negotiating hard, because they can't. There's no real substitute at scale. Third, ecosystem lock-in. CUDA, software stack, developer base. This is not just hardware, it's an entire platform. So, yes, this is a generational business. Now, here's the interesting part. Despite all this, the stock hasn't really moved much this year, and that's frustrating a lot of investors. But this is actually very normal. When expectations get too high, the stock needs time to grow into the valuation. Right now, the concerns are AI spending sustainability, big tech building their own chips, export restrictions to China, and simply valuation fatigue. So even though the business is still crushing it, the stock is taking a breather. And honestly, that's exactly when I start paying attention. Valuation. Let's do the math properly. Base assumptions. Current revenue, $130 billion. Net margin, 50%. Let's normalize down slightly. Net income, $65 billion normalized. Now let's project forward. Base case. Let's assume revenue grows to $400 billion by 2027. Net margin compresses to 40%. That gives net income equals $160 billion. Apply a 25x multiple, reasonable for a dominant mega cap. Fair value equals $4 trillion. Bull case. Now let's go aggressive. Revenue hits $600 billion plus. Net margin stays high at 45 to 50%. That gives net income around $270 billion. Apply a 30x multiple. Fair value equals $8 trillion. This is where the AI supercycle narrative lives. And to be fair, it's not impossible. Bear case. Now let's be realistic. Revenue slows to $250 billion. Margins drop to 30%. Competition increases. That gives net income around $75 billion. Apply a 20x multiple. Fair value equals $1.5 trillion. So this is the range. Bear, $1.5 trillion. Base, $4 trillion. Bull, $8 trillion. Now ask yourself this. Where is the stock today, and which scenario are you betting on? Here's the honest truth. At this scale, Nvidia does not need to be perfect to still be a great investment. Even in the base case, you're looking at solid upside over the next few years. But the risk is clear. This is no longer an undiscovered opportunity. This is a crowded consensus trade, which means expectations are high, volatility will be high, and drawdowns will happen. Personally, I'm tempted to buy more, but not blindly. I'm not chasing hype. I'm waiting for market pullbacks, AI sentiment dips, or temporary earnings disappointments. Because with a company like Nvidia, you don't need perfect timing, but you do need discipline on entry. Final thought. Let me leave you with this. We are potentially witnessing the first company in history that is the most valuable, the fastest growing, and the most profitable all at the same time. That combination is extremely rare, but it also means there is zero room for complacency. So the question is not, is Nvidia a great company? That's obvious. The real question is, at what price does it make sense? And are you willing to hold through the volatility to let this story play out? For me, I'm watching closely, and if the opportunity comes, I'll be adding. If you found this useful, subscribe to the Investment Diary. I break down businesses like this with real numbers, not hype. See you in the next one.